My name's Bernard Doyle, I'm JBWere's Investment Strategist. Well, the bull market's 8 years old and we're heading into the middle of 2017, so it's worth just checking what are the key drivers of equities at this point and where we see opportunities and vulnerabilities for the rest of the year. So I guess the first thing that we are focused on with a maturing bull market is interest rates and how the Federal Reserve is behaving. And on that score, we're pretty happy. We've had some rate rises from Janet Yellen and probably more to come. But the key thing for us is the message from the Fed is quite comforting. The Fed is relaxed on inflation and is still more focused on nurturing growth than slowing the US economy. And while that situation remains in place, we think the interaction between the Federal Reserve, interest rates, and how that impacts the share market is still quite benign and still quite supportive of equity markets. So our core view is that the end of this bull market will be driven by rising interest rates, rising inflation, and the Federal Reserve. From what we're seeing at the moment, we think we're in a good shape and a Fed that's quite relaxed and letting the US economy run a bit further. The second area to watch as you get it into a long, strong global recovery is imbalances. And if you look at the last two problems that global equity markets had, the financial crisis and the tech bubble, they were all about imbalances. So we're carefully watching areas where they might be emerging. And again, thankfully, we're not really seeing danger signs in the US economy or all the other major economies. The one area to keep an eye on is Chinese debt. But again, we don't see this as an issue for 2017. It could be something that emerges more as a problem for the Chinese economy in 2018 or later. But for now, on that question of are we seeing big imbalances in households or corporate balance sheets, we think we're in a reasonable condition for this stage of an economic cycle. The third thing, and really the topic of this update, is all about politics. And so we've had the first 100 days of the Trump presidency. We've got a lot of a busy year of elections underway in Europe, and we've got an election here later on in the year. Politics I don't think will change the nature of this bull market, but it will present volatility, risks and opportunities. So far from the Trump presidency, they've had some hiccups, particularly with healthcare, but our core view is that the Trump and the Republican Party will still get tax cuts through, and we think ultimately that will be supportive of particularly US equities. Now, we've just come back from a French first round presidential election which saw Marine Le Pen and Emmanuel Macron make it through to the playoff round or the second round on May 7th. Now, importantly, we think because Macron has made it through, the chances of him becoming the next French president is very high. Marine Le Pen struggles to get more than around 30% of the vote. Things may tighten up between now and early May, but we think it's more than likely that you'll see President Macron rather than President Le Pen come May. And that again is just another risk to tick off for markets. Later on in the year we have a German election. We don't expect that to deliver anything particularly worrying, certainly from a risk to Europe. And then it's really not until 2018 with the Italian election, which is scheduled for the first quarter next year, that we have to really rethink about European political risk. And so on the politics questions for around the world, whilst it's still quite a volatile environment, we generally are pleased with what we're seeing so far this year in terms of how politics have evolved in some of those key countries. New Zealand's in an interesting situation with our election coming up in November, and we're starting to see investors focus more on the prospects for either re-election of the incumbent or a change of government. Our core view in New Zealand is maybe the risk of a change in government is not being priced in enough to our local equity market, and it still leaves us a little bit cautious on the outlook for New Zealand equities with that election looming in November. Overall, though, as we look at markets around the world, we think we've travelled through some really interesting times over the past year. This is an ageing bull market, so we have to be a little bit more careful about what we expect from returns in our portfolios. But generally speaking, when we look at those core issues of interest rates, imbalances and politics, we're reasonably comfortable with what we're seeing and continue to expect modest gains in our equity portfolios from here. We'll give another quick update in due course, but of course at any time please make contact with your JBWere advisor for any updates or additional questions that you might have. Thank you.